Good evening and welcome. I am Amarachi Ubani. Tonight, Central Bank of Nigeria's Monetary Policy Committee meeting retains current levels of monetary policy instruments and indicators in order to forestall inflation. U.S. President Barack Obama commends President Buhari's efforts in the fight against corruption and terrorism. Supreme Court affirms Yahaya Bello's election as governor of Kogi State. And UN suspends all aid convoys in Syria after airstrikes targeted vehicles near Aleppo.
On Business News tonight, financial analysts react to central bank's decision to leave key interest rates unchanged, say action may not solve recession.
And on sports news, four-time African Footballer of the Year Yaya Toure announces his retirement from international football.
And from Abuja, I'm Gloria Umezuke. People's Democratic Party's warring factions agreed to mend fences, resolved to reconcile all aggrieved members.
We begin tonight with the decision of the Monetary Policy Committee retaining all monetary policy instruments and indicators at their current levels, a decision that leaves the monetary policy rate at 14%, the cash reserve ratio at 22.5%, and liquidity ratio at 30%. Governor of the Central Bank, Godwin Emefiele, who made the announcement at the end of the two-day MPC meeting, explained that the restrictive stance is on the basis that lower rates could further fuel inflation rather than encourage productivity. According to him, the decision to retain the rate is also aimed at driving growth, which is the same target as that of the fiscal policy. Authority, beg your pardon. Our correspondent Omelogo Nadi has more.
To the last but not the least of the...
About 24 hours ahead of the Monetary Policy Committee meeting, the Minister of Finance told captains of industries at a presidential business meeting at the State House in Abuja that lower interest rates are expected in a recession.
Interest rate rise, I think, during a recession needs to be relooked at, and I'm very sure that the Monetary Policy Committee, who are meeting this week, will be looking at that. In a recession, we need to reduce the cost of borrowing.
But dousing the high expectations of business concerns over lower rates, the governor of the central bank announced a retention of all monetary instruments at the current levels before the recession set in.
All 10 Monetary Policy Committee members voted as follows. 1. Retain the MPR at 14%. Retain the CRR at 22.5%. Retain the liquidity ratio at 30% and retain the asymmetric window at plus 200 and minus 500 basis points around the MPR.
He says previous rate cuts put pressure on the economy as the lower rates fueled the demand for forex. He also says making provisions for governments to borrow at lower rates might stimulate demands, but also create a risk of very high demand with much less supply.
If you borrow at lower rates to stimulate spending, what that does is that, well, yes, it stimulates demand for goods. But when you stimulate demand for goods by providing cash or money to be spent without taking action to boost industrial capacity, taking actions to boost manufacturing output, what happens is that you will see a situation where you have too much money chasing too few goods, which will also worsen the inflationary conditions that we are now.
The expectations at this unusual economic times is for fiscal policy to harmonize with monetary policy and also for monetary policy rate to move closer to the inflation. But the central bank governor says lower rates are not the immediate solution. Omelogo, Nadi Channels Television News.
Let's get some analysis now on today's MPC meeting. Joining me to discuss the implications of the decision by the MPC is an economist and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rawane. You're welcome to the news at 10. You are listening to the CBN governor.
Yes, I did.
What did you make of what he said today?
First of all, there's what we call goal consensus, but policy misalignment. So the goal to get the economy out of recession is aligned, right? But the strategy to do that and the sequence of steps is misaligned. So what did you see today? They held the rates at 14% per annum, and that's not that important because the anchor rate, which is the MPR, actually has achieved nothing. The real problem is that Treasury bills are going at 18% per annum, effectively 21%, and if you take the tax shelter into consideration, it means the risk-free rate of borrowing is 30%. Something has to happen in that direction. You don't need the MPC to decide that. So I think, and it is widely believed, that at the auction tomorrow, we will see the T-bill rate go decline. Well, there was a question about inflation. The year-on-year inflation is at 17.6%. It's an 11-year high. But the month-on-month, when you analyze it, comes to about 12.1%, and it is declining. So if the month-on-month inflation is more relevant to inflation expectations. And the central bank governor laid out the case both for and against an accommodative stance. But you must understand that doing nothing, basically kicking the can down the road, is accommodative. If not, they would have actually increased the rates. So when you stand still, when other variables are moving, you're actually being accommodative to some extent. But why the decision? The decision was because the reserves are at a 3-year low, $24 billion. The exchange rate is misaligned, and there are external imbalances. The economy is in an anemic mode. And if you look at the policy being prescribed, it's what we call the paradox of thrift. In the last 3 months, the central bank has mopped up 7.4 trillion, which is in fact about 33% of money supply. The monetary conditions are tight. You need to loosen the monetary policy to stimulate growth, to support the growth trajectory. However, there were concerns about the fact that there were external imbalances and the Naira is weakening in the market. Okay, so if you look at all the indicators, there are 12 indicators. 9 are red and 3 are in amber. And what we've done so far is move in a haphazard direction. These are you can see there are 9 red and 3 amber. There's no green. So we are in a very difficult situation. And if you compare us to our contemporaries in sub-Saharan Africa, which is the next slide, you will see that Nigeria has inflation of 17.6, interest rates of 14, but negative growth of 2.06. These are the steps that we've taken so far from February all the way to September. And we've been able to accomplish, and this is the sub-Saharan African comparables. You see that we are the only ones with negative growth. All the others have, even Angola, which is a difficult case, is having positive growth of 0.63. So what is the outlook? And that is what Nigerians want to know. How long are we going to be in this situation? And when are we going to see light at the end of the tunnel? The truth is that there's no silver bullet. It's going to be a slow recovery. And the move of today is going to make the recovery even a bit slow. But at the same time, maintain some kind of balance in the foreign exchange situation. Because the foreign exchange situation is kind of dire at this point.
As for the period of time, I heard you say before about 18 months or so.
Yeah, 18 months is the minimum, I think, because the U curve is, and that is a mild recession, to be honest with you. If you have an L curve, you could be in this for 10 years. All right, so what are we going to see? We are going to see, I think that by tomorrow and going on forward, you'll see the treasury bill rates come down, right? Both in 180-day, 360 days, and the 90-day category, which will take some money back to the money markets and back to the real sector. You will see that way, debt service, which now takes 28% of government expenditure, will go down to about 12%. No, capex will increase to 20%, and debt service will reduce to about 20%. Nominal interest rates will come down, and the Naira will weaken in the short term. However, we expect that external reserves will also decline because there's a payment due on Friday, $1.46 billion, which is our forward delivery. The way out of this is that oil production has to go back up. Then we'll get more foreign exchange. Because right now, because of the militants, and they're splintered all over the place, we have also about 30 different groups. If you can get, we think that this month We'll see Kwaibo back. They've already announced that. Focados may come back, and a couple of things. If we can settle with these guys, then production will come up. The efforts of the fiscal authorities, the Ministry of Finance, Trade, Investment and Budget, to stimulate the economy into a recovery has to be helped. I suspect that we don't even need to have an MPC to actually bring down rates and go into an accommodative stance. I think we can have an extraordinary meeting to deal with this. But the road ahead is difficult, and the recovery is going to be slow, but it is certainly going to happen.
But what do you think the message of leaving interest rates unchanged, what message does it have for investors who want to come into the country?
First of all, no investor is going to bring his money in, even at 25% per annum, will bring his money in because of the point that how much interest are you going to give him to compensate him for the fear of a devaluation? So we have to accept that the currency and external balances are here. So at this point in time, you choose growth over inflation. But the important thing is that inflation, the monthly inflation rate, is down to 12%. So even if the MPR is higher than that already. So the fear of inflation is a bit overemphasized. The truth is that the reality is that money is going after the exchange, after the dollar, because of fear, uncertainty, speculation, and to a large extent on Nigerian activities.
There have been other, economists and analysts as yourself who have been monitoring what's been going on. One of them is billionaire businessman Aliko Dangote, who has suggested that the federal government sell the NLNG. What do you think?
I won't be specific as to what to sell. The LNG is a cash cow, so I don't know that should be sold. But the assets that need to be liquefied, I think, like our joint venture assets, because you have the petroleum profit tax, you have rents, royalties, and all of that that you can collect. And quite frankly, I don't know that Nigerian interest is actually serving any purpose. However, to make those who feel comfortable, patriots and economic patriots, and I'm one of those, I'm suggesting that sell the assets with a simultaneous repurchase option, so that you have an option to buy it back if the price of the underlying assets increase, so that you're not selling the family treasure. But at this point in time, you need to liquefy assets to add to the pool of dollars. We need to borrow from multilateral agencies, from export credit agencies, from the Eurobond market. I think they're going to appoint some advisors in the next week or two. So it's quite clear the fiscal authorities are quite online, and I think the monetary policy authorities are going to come on board sooner or later. It's just a question of the pace. But one thing is clear: they could have done a bad thing by increasing rates. They didn't do that. That's accommodative. And now I think that if they bring the treasury rates down, it will send the right signal, and all other things will follow. So at this point in time, I can say it's a neutral position.
Very quickly, the NBS says that about $1 billion has been invested into the economy through FDI, and portfolio investor. Has this made any impact?
$1 billion is nothing compared to $40 billion of our export earnings. As a matter of fact, our diaspora flows, our diaspora remittances should be in the neighborhood of $23 billion, which is about $2 billion a month. $1 billion doesn't cut it, but it's better than nothing. The reality is that even the $1 billion we're talking about, some of it is a refund of the banks bringing the money that the NMPC was owing. So I think that to a large extent there's a lot of asymmetric information and playing with mirrors here. The reality is that the economy is on the ropes, and we've got to do something to get out of it.
Mr. Bismarck Rwani, thank you so much for joining us tonight.
Thank you.
In part two, after the break, U.S. President Barack Obama commends President Buhari's efforts in the fight against corruption and terrorism. Please join us again.